Good day, one and all. This is Dr. Sivaraman of iknowindices.com. On Monday, 3rd of April, I gave the forecast for this particular week. This being the first week of April, the market is expected to show very volatile moves, either way moves, or a quick upward move followed by quick downward move, again a quick upward move. That sort of wide range swings are expected to happen. So that is what happening in the market at the moment. And let us review the forecast, and also we'll try to do the market reading for today and how exactly the players are expected to make the moves before and after that of non-farm payroll. So when non-farm payroll is on the card, market is known to make subdued moves because not many traders will commit positions before knowing the outcome of the non-farm payroll. But you come across now in the market, already Japanese yen has made a very big move from that of the high to that of the low, almost close to that of 90 pips. And then it started reversing it. It has come to the middle level. And in the case of Euro and GBP, they are doing more of a consolidation with 25 to 30 pips swings. And similarly, in the case of USD CAD and Australian dollar, about 30 pips swing. So USDN was the one which has made a quick downward move and followed by that a quick rise to the middle level. We know very well during that of the monthly trend reversal time, the players are known to make very quick extended stop and moves. And that will indicate that they hit all the stops on the downside before making a big rise. So as we know that when they wanted to rise USDN, so Euro and GBP could make a dip and then rise move during and after that of non-farm payroll. So that is what the forecast also says. So let us see one by one the forecast, and also we'll do the market reading, fine-tuning the forecast using the initial lows and the highs, and also we will touch upon the trading strategy. I will give you the trade call so that you'll be able to make use of it in your demo trading account to understand. So as we have seen that they firmed up on Monday and also on Tuesday, then on the Wednesday, in the case of Euro and GBP, at the time they have been holding USD yen at the lower level. Then subsequently yesterday, when Euro and GBP started dropping, USD yen went up. Then after that, quickly they made a slide in the case of USD yen, and they are expected to make the swing and rise move nominally, and then they are expected to make a quick firm move after that of the non-farm payroll, and then start making the slide in the case of Euro and GBP during that of the US session. At the time you will come across that Euro, GBP as well as USD yen are expected to make a downward move, and then USDN is expected to gain upward. So they are expected to handle the crosses, yen crosses, and later on start making the USD gaining move in the market. So this is what they are expected to make. And afterwards, during the second week of April, that is from Monday, they are expected to make the week beginning false move on the first day of the week, then followed by that the swing and rise move on the rest of the days. Then in the case of, in the month of April and May, we could come across considerable gains in the case of Euro and GBP, and also USDN is expected to gain upward, not expected to make a big drop. Instead, it will also alternatively gain the levels. And in the case of other currencies, USD CHF, USD CAD, and Australian dollar, they are expected to make the wide range swings during this time. So this is what we envisage based on the forecast. They are expected to make a quick rise and then a drop and then rise during that of the non-farm payroll announcement. Afterwards, during the US session, they are expected to make the slide against the expectations of the traders. We will go to that of the range in which the currencies were making the moves. In the case of euro, they formed the low as 1.0629 and the high was 1.0690. You can understand how about 70 pips is the only range in which the entire week euro was making the swing. And in the case of GBP, 1.2420 happened to be the low and 1.2556 is the high. So around 130 pips they made the swings in the case of GBP. So it shows very clearly that not many traders are participating in the market. That is why the players are not able to make any big headway on the upside or on the downside. They are trying to hit the stops and trying to earn by making quick drop and quick rise moves all the time. So today for non-farm payroll also, they are expected to make a quick rise and a quick drop move, and invariably that will be in the range. Then in the case of CHN, they came down to 110.13 and the high was 111.59. So not much of a move here also. Then in the case of CHF, 1.0008 was the low they are set and 68 is the high. So hardly about 60 pips swing. And in the case of Canadian dollar, from that 1.33 to 1.3451 level, they just made about 150 pips swing. Here again, in the case of Australian dollar, around 120 pips. So in all, you find the range has really come down drastically. And one of the reasons is the traders might be waiting for the outcome of the non-farm payroll. And once the trend is set in the market, they could participate. So that is what normally you come across during first week. In that process, what the players do, they make some extreme moves in the market and create uncertainty, so that those who have been doing the swing trades, they cut loss when the market is against them. Then what happens the next following week, they are expected to set the trend. And today during that of the US session, they are expected to make a downward move. And next week also, on the first day of the week, they will make the week beginning false move on the downside briefly, and that will give that impression to that of the traders that the market is expected to follow non-farm payroll and then continue to make the slide in coming days. But after the brief downward move, they are expected to make quick upward move in the case of euro and GBP as well as USD. That will give the real surprise to that of the traders, and then the traders go in for distress trades. So invariably you come across the players are here to trap the traders whatever way they try to enter into the market, because only when they trap the traders they'll be able to earn money. So it is their bread and butter, probably not bread and butter, it is the silver spoon for them. So still they have to make such cunning moves in the market and then try to earn money from the other traders when they do emotional trades. Those who trade cautiously and also take very less position in the market and continue to wait without using much of a strategy, they'll be able to see profit. Only thing is they should not have unlimited greed or unlimited market fear. And if they have the understanding that, okay, when I get sufficient profit, I should close my position. If they are contented and if they are optimistic in that, then they will be able to make good progress when they take less positions. But only those who are taking about 4-5 positions simultaneously, thinking that they are all great averaging opportunities, then the players, what they do is they make one extended move and trap such traders. So even though you come across the range is very minimal, but still they make some extended move from the high to that of the low, and then again reverse. So when the traders keep about 50, 60 pips or 75 pips, the stop, then such stops are being hit. Because many of the traders go in for such trades only when the trend becomes visible and telling that the trend is your friend and try to commit position, that is buy after the rise or sell after the drop. Then the trend reversal happens during first week, then they lose money. So the market timing is very important. That is not indicated in the chart study. Now coming to that of the market reading, I noted down the initial lows and the highs in all the 4 majors and the 2 commodity pairs. Euro formed the low 1.0638 and the high is 1.0660. It has not breached the low or the high. GBP also 1.2454 and 1.2476. They are not breached. Yen 110.13 and 111. They are also not breached. Then CHF 1.0030. The low 1.0060 is the high. They are also not breached. Then in the case of Canadian dollar, 1.3397, 1.3342, they are also not breached. In the case of Australian dollar, 75.17 and 75.47, they are also not breached. So you find in all, they are not breached the low or the high, indicating that the market volume is relatively very low. And that is why the players are holding the market and trying to induce the traders to take positions before committing any big move on the upside or on the downside. So as you see that they are not breached the low or the high during that of the Japanese session and almost closer to that of the late Japanese session. During the European session also, they are expected to make slow moves in the market. And later on, you could come across quick whipsaw move after that of the non-farm payroll, and then they are expected to make the slide in Euro and GBP and gain the levels in the case of USD and during that of the US session. Now the recommended trades for the day. So you can keep a buy limit order at 1.0635 close to the low. When they make a brief downward stop, and you can get the fill and keep 1.0600 as the hedge order to limit the risk. And once they start gaining the level, you can keep stop at entry here and try to book profit during the gain they will make initially after the announcement of the non-farm payroll, and then later on they are expected to slide. At that time, before that you can book profit in the buy position. Similarly, in the case of GBP, 1.2430 near that of the low, slightly lower than that of the low, you can keep the buy limit order, and they are expected to gain quickly the levels and book profit. Then in the case of Australian dollar also, sorry. It should be $0.7510, the buy limit order, and take profit at 75.70, keep 74.80 as the hedge. So if you got any question, you can ask me in the question answer window. I'll be willing to answer to those questions. So we are having the daylight saving system. So the session timings are mentioned here. We try to follow it till October. Okay, there's a question. How is the USD CAD move? Good level to sell? Yes, USD CAD, it went up to 1.3451. There is a great sell level. And even small firm up, you can take a sell, and definitely they will make the slide in the case of USD CAD this week and next week. They are making high level consolidation and distributing the positions in the USD CAD. Any other question, please? Okay, Bren has got a question. When the price do not hit the estimated range for the week, are you saying it is just because of the lack of volume? Yes, the estimated values are based on the potencies. As I told you, they are all mathematically calculated. So you know that in a week they can make a swing for about 350 pips in the case of euro, about 600 or sometimes 450 pips in the case of GBP, and then 450 pips in the case of USD and USD CHF and USD CAD, 300 pips in the case of Australian dollar, and they are all the maximum potency. Depending upon the previous week move and what sort of accumulation or distribution they are done, the calculation is fine-tuned to give the range. Then once the range is obtained, they are expected to fulfill the range. Most of the occasions you come across the range is fulfilled. When it is not fulfilled, then obviously the players are not here to fulfill the range without any benefit. Only when the stops are there, they go up to that limitations and then try to hit the stops. Suppose you keep about 700 pips away from that other position, you stop. Will they be able to do that stop? And no, not at all possible. But if you keep it up to 300 pips, you stop. Then there is a chance for them, if there are plenty of stops, then they reach up to that level and hit the stops. So the purpose of showing the range is to hit the stops within the prescribed limit. That is why they do it. If they don't do it, obviously you don't come across the stops there. When the stops are not there, obviously the traders have not committed positions, because not many traders trade without stop, especially the institutions and others. They keep the stop as a thumb rule, and those who are doing big volume trades, and they also keep the stops. Only small traders, they try to trade without a stop, trying to expose their equity, because it is their own equity, so they just use various type of trading strategies. But the institutions and other big banks, they have to necessarily limit the risk. They cannot take unlimited risk and wipe out the equity. So they have to keep the stops. So when the stops are not there, there's no point for the players to make any big move. They only just do the extended stop, and wherever needed, just to hit the stops which are close by. That is why they gain the level. From there, they come down to do that stop, extended stop, and still which is within the range of 100 pips. So obviously that quantum of stop is not very much. And in the case of yen, you know that they can do about 200, 300 pips downward move in one go. 2-3 days continuously they do it. But here you find that they hardly done about 100, 150 pips, indicating that the volume is very, very low. Any other question, please? Okay, this is the forecast. So for non-farm payroll, they are expected to make the swing and then a small dip and then rise after that of the non-farm payroll. And when people jump in and try to buy after the rise, then the players are here to drop and hit their stops for the weekend. And on Monday, they are expected to make the week beginning falls move on the downside and then start gaining the level. Then you will come across the visible gaining moves from that of next week in the case of Euro and GBP. And alternatively, USDN is also expected to make an initial downward move followed by that a gaining move along with that of Euro and GBP as a contrarian move. You'll come across that for subsequent 3 weeks. That's why the players are doing consolidation here for all the events to get over. Then they can make decisive move of their own. Okay, no more question coming. So let me conclude. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. And I'll come back on Monday, 10th of April and give you the forecast for the next week. And be optimistic. The players are expected to make the US dollar weakening move from that of next week. At that time, it will be a great buy and sell trade opportunities. And today, after that of the drop, if you have got enough equity to carry over to that of the next week, you can buy after the drop in the case of Euro and GBP if they have done about 100 pips drop. If it is a nominal sideways move, then don't commit. Next week, you can commit the position. Because when they make the downward move in a very big way for about 150 pips, that means a lot of traders are holding long, and those holding long will come for liquidation, and such longs will be accumulated by the other players. They just squeeze during the weekend the traders having unfavorable position to liquidate, and that they absorb it as a strategy. So at that time you can make a buy and then wait for the market to gain next week, and you can book substantial profit. So I take this opportunity to thank FX Street and you people, and see you on Monday with next week forecast. Until then, bye.